Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 3rd of May. Starting off with the FTSE 100, which is getting into record or remaining in record highs. At top of that December channel there at 82.20, so we're looking for that hopefully later today. End of day close above 82.20 could open up the prospect of as high as 8,500 by the end of this month. The reason for that particular number is that apart from being the upper parallel of the December rising trend channel, it's also the top of a rising trend channel from back in 2007. On the downside, obviously we've had support this week above 8,100, but the next level down really 80.44, that early April resistance. Worst case at the moment is the rug is pulled and we head down to 78.80, which is also near the floor of the rising December trend channel. Moving along to the DAX, and here luckily, you can see that this market's seen the floor of that rising trend channel from October, around 17,800 above that, looking for neckline resistance, 18,200, and obviously the ideal scenario is that we head up to 18,500, best levels of the year by the end of this month. On the downside, hoping that there won't be anything worse than 17,600 or maybe 500, just to take out the stop losses clearly below that March-April support zone. Next up is the Dow, and here we had a decent performance yesterday with Apple, I suppose, helping in the mix as well. We've basically re-established the floor of that rising trend channel from September, October, looking for the 50-day line, 38,700, but at this stage, probably wise not to get too excited, given that we could consolidate between 37,600 and the 50-day line for quite some time, if we want to. And we've also tried to break that double RSI failure or triple RSI failure last month around or below the 50 level. Moving along to the situation at Bitcoin, which has been not great, to say the least, but it looks like we found some support at that support line there from the beginning of March. So that line there around 58,000, so above that. Looking for potentially back to the 65,000 level, which was the recent resistance, and also ties in with the falling 50-day moving average. If we do break back below recent support around 56,600, then there's a risk of early February resistance at 53,000, but probably the worst is over for now, especially given the way that we've bounced near the oversold RSI level. Last time we did that in August, we actually started a fresh bull run. Moving on to gold, and here also a bit of a rug pull of late, but we have managed to find support at and just below the 2,300 level. 2280 probably our line in the sand above that, looking for a retest of 2360, which was the late April resistance for this market. Still got that rising trend channel from February just about in place. Moving on to the stocks, and tweeted out about Angus Energy yesterday. Got rather excited with that, but given that there was a chance of the shares breaking the 200-day moving average at 0.55 and then heading up to 0.75, we had a go at testing or breaking the 200-day line, but we've come back since. At least while we're above, though, the 50-day moving average of 0.38, we still have a chance of a turnaround and a move to 0.75. I suppose by the end of this month. You can see that we haven't been above the 200-day line properly since this time last year, so there's possible trend change in the offing at Angus. On to Altitude, where some people were rather cynical about the latest update from the company, but was a unfilled gap to the upside. We pushed through the 200-day line, 37 pence, and we were looking for 47 pence or 48 pence at the top of that broadening triangle from October. So it looks as though while we're above the January resistance at 36 pence, we can head up to 47 or 48 later this month. So good setup there on Altitude. On to Anglo Asian, which I covered recently. Just wanted to update on that. Here we've had an unfilled gap to the upside yesterday, and we're holding that above the 200-day line at 60 pence. Above 60, we're looking for 90 pence. Perhaps by the end of next month. Obviously, an end-of-day close through 70 would be a decent momentum signal there. Double RSI bounce at neutral 50 is also very encouraging, as was the bear trap cap reversal back in November. On to Angle, where big news today, but I suppose the shares up a bit, but not up at maybe as much as they could have been. There seems to be a block there around 17 pence, but we have gapped up again, follows 2 gaps higher that we had last month. The B at the moment is while we're above the floor of the gap and the 50-day line, still looking for the low 20s at the top of that broadening triangle from back in January. Gem diamonds moved yesterday in quite a spectacular way. It looks like we've had a gap higher as well, unfilled gap to the upside. So that's one of our favorite setups. Rising 50-day line. What would be nice here is that there's no end-of-day close back below the 200-day moving average, around 12.5 pence, and then we head up to 16.5 pence later this month, even if we fade after that. But a decent turnaround there on that. On to Bluejay Mining, which is a requested stock, and here obviously not a great run in the recent past. Just the first signs of a turnaround, potentially within a broadening triangle base, the top of that triangle up to 0.4 pence, but we want to see the shares remain on the right side of that initial April support there, 0.27. Above that, then there's the chance of a 0.4 target, given that this would be a bear trap rebound, and also given the bullish divergence in the RSI window versus that lower late April support. Nice situation now coming up at Helix expiration. We were looking for the first target there, 13.75, which we got within the day yesterday, and then after that, a rather ambitious resistance line target as high as 17 pence by the end of this month. It looks as though we could actually do this maybe by the end of next week, but 17 pence the current target there, while we remain above 14 pence. But the logjam certainly broken there, and we've broken the initial resistance there around 12.25, so above 12.25 it looks like we're set fair for exploring new higher ground at Helix. Neo is next, and here it was disappointing that the shares managed to fall below the 0.5 pence area, but the good news is that we're back now above the 0.48 level, which was the old April support. That suggests that we've got a bear trap going on here. Initial resistance here around 0.53, but looking for 0.7 pence if this is the big turnaround here by the end of next month. So let's just see, the longer that shares remain above 0.47, the greater the chance of a bear trap rebound. And also, of course, we have bullish divergence at lower low for May, but RSI the same level, so that is encouraging, but maybe slightly higher. On to one of the bigger stocks, which I tend to look at on a token basis. Here we've got Oxford Biomedica, and the reason for inclusion today is that it looks like we're just breaking above that old resistance there at £3.18.5. Above that on an end-of-day close basis, looking for the top of that rising trend channel base from back in August, as high as £3.95 by the end of next month, or maybe even by the end of this month, the way things are going. On to a company which has managed to raise a decent amount of cash today at a premium level, and good institutional backing as well. And it comes in the form of Ondine Medical. Here we've had a key reversal off the lows, bullish divergence as well. And the view at the moment is that at least while we're above the late April support there, around 5.75 pence, looking for the shares to head up to the top of that falling wedge, 9.5 pence, hopefully by the end of this month. If you're cautious, I suppose you wait for that last resistance there last month around 7 pence to be broken, but that key reversal today in the bullish divergence, plus obviously the fundraise, giving this stock a decent glow. Moving on to Poolbeg, which had great IP patent news this week. Here we've had the unfilled gap to the upside through to new highs, which tends to be a decent signal in its own right, looking for up to 15 pence, 15.25 pence by the end of this month, possibly much more. If you're a fan of the shares and looking for greater glories, then it would be the upper parallel of that rising trend channel, currently heading towards 19 pence by the end of next month. The key here, though, is staying above 12. So above 12, really looking for the 15 and then the 19 by the end of next month. Finally, Poolbeg pushing on through. Onto Petrel Resources, and here a nice little breakout within out of this falling wedge through the 2 pence zone. Above that, looking for the top of the broadening triangle there from November, as high as 3.6 pence by the end of next month. Again, that could be sooner. Always like looking at Tern, especially if it gives a pie in the face to the bulls. Here we're having another go at breaking the 200-day moving average. We've obviously been blocked by that for the past year. 200-day line currently around 3.75 pence, and above that looking for 5 pence by the end of this month. Obviously, fundraisers, etc. permitting, but we've had a sideways shuffle above a rising 50-day line. We've had at least a double bounce off RSI 50, so as long as no rug pull coming through, 5 pence should be on the cards later this month. Upside value while we're above 3 pence, which was recent broken resistance. Finishing off with more acquisitions. So here we've got rising 200-day line, broken through the 50-day line. Initial target here was 0.8, and just upgraded that now to potentially up to 0.96, which is the upper parallel of that July resistance line projection. That's it for me today. More updates over the weekend.